Hi, welcome to the Market Alert for Wednesday, the 20th of September 2017. So today is D-Day. This is why the markets were so quiet yesterday. Already warned about this beginning of the week and yesterday, of course. So today we'll see whether Yellen will make an announcement that they're going to start normalizing the balance sheet, going to reduce it. Frankly, even if they do announce it, it is not going to be possible to do. We're seeing a slowdown in the economy. Toys R Us have just gone pear-shaped in the US. People are maxed out on credit cards, as we saw yesterday in The Guardian. And this is the same across the world. Central bankers have, all they've done in the last 8 years is create massive asset bubbles in stocks, bonds, housing, and massive debt for the people that have bought into this fallacy once more. We've had this for the last 40 years, since the 15th of August 1971, when Nixon and his cohorts decided to remove the gold standard and print fiat currency, and ever since then we've had boom bust, bubbles popping, same pattern, and we're going to see this going forward as well. So now here they want to normalise the balance sheet, having created massive asset bubbles and personal debt yet again, except this time of course they did it with 4 trillion, or adding 4 trillion to the balance sheet to keep the illusion alive. So it'll be interesting to see how this pans out going forward. Certainly interesting on their announcement. It also says here that this could be a last major announcement, and also hinting whether the December meeting is live for one more rate hike in 2017. I very much doubt it, but who knows? They are full of madness, fully paid up members of the loony club, all of these central bankers. Anybody else who's got a basic understanding of economics wouldn't even be thinking about printing more money, but there you go, it's just the way the world has become. So yesterday let's just start off with the pound. The pound was really quiet. All of the markets were quiet for the first part of its session. You can see their prices sideways, and then all of a sudden we had a bit of a move to the downside, and then they brought the market back later on in the afternoon, and the markets just traded sideways. Plenty of opportunities to get out at break even when the market went sideways if you were a buyer of this market. In the daily chart of the pound, you can see why the market's stuck in a sideways range at the moment. Again, everything waiting for today's announcement. Let's see what happens there. News. What have we got to the run-up of Yellen today? We've got retail sales from the UK, and then it's over to the US at 7 p.m. there for the FOMC economic projections. So again, I wouldn't even bother watching if I were you, not unless you're having trouble sleeping, because it'll be the most boring thing you've ever seen, unless you want to laugh, of course, as they make all of these forward projections. So there you go, a lot of FOMC stuff, press conference as well, and 7 o'clock, see what happens with this lot. So the Dow yesterday again warned that it would be very quiet, not only because of the FOMC meeting, but of course it's Tuesday as well, and you can see there lots of signals, unfilled signals, only the one that did fill, but we know we want the market up, not down. So in a quiet market where we're waiting for news to go short is not a very good idea, because the market is going to be sideways, as we can see there, and that's how it is overnight as well. So again, we've got a situation where the markets have put in another new all-time high on the overnight. Actually, I'll just check this. We've got 22,386 and pop that on there, just 1 point below. So yesterday's high is the all-time high at 22,386 at the moment. So we'll see. I'm sure if the Fed say they're going to normalise, then we'll see a move to the upside. We have what is known in the trade as a parabolic move, where you've got these continuing all-time highs being made, but eventually they do fall apart. It's as simple as that. Right, quick look at the implied before we finish. Implied volatility up from 701 to 717, obviously being slightly cautious there that not knowing what Yellen is actually going to do. So again, but it isn't going to make much difference to the price of the options, to be honest with you. But interesting to see that 717 also, that was what it was on Thursday of last week. Or Friday, I don't know. But anyway, we're back to the support there. Just a bit of resistance at 717 as it starts to come back. Right, that'll do it for today. Wait and see what Yellen has to say. If the market's busy in the first part of the session because someone's leaked something, then any profits made before 7 p.m. you want to take off the table. Other than that, it will be sideways. Again, you can gauge this by the first 10-15 minutes by the size and the range of the bars to decide whether you should jump in or not, as that's where the biggest volatility is, and if there isn't any there, then you're not going to get any for the run-up to the Fed announcement. Right, that's it. As ever, thanks for watching. See you in the next one.